right, let's get right into it. Today, we're going to break down one of the first and biggest questions every new investor has. Should I buy stocks or ETFs? What's the real difference? And more importantly, what's the right choice for you right now? Let's figure it out. So, you're ready to start investing. You've got your account open, you've put some money in, and now what? You're staring at the screen, and the first big fork in the road is usually this. Do I buy a share in a single company, a stock? Or do I buy this other thing called an ETF? Honestly, understanding this one choice is probably the most important first step you can take.
Let's just cut straight to the chase here. The entire difference between a stock and an ETF really just boils down to a super simple idea. One versus many. Do you want to put your money on a single company, or do you want to spread it across a whole bunch of them all at once?
First up, let's talk stocks. This is the classic. When you buy stock, you are literally buying a tiny little piece of one company. That's it. Your money's fate is completely tied to how that single business performs. If they invent the next big thing, you could do great. But if they stumble, well, your investment stumbles right there with them. Okay, now for the ETF. The easiest way to think of an exchange-traded fund is like a shopping basket. Instead of just buying one single apple, you're buying a basket that has a little bit of everything in it. Hundreds, sometimes thousands of different companies all packaged together. With one single purchase, you instantly own a tiny slice of all of them. So you've got this choice, one company or a whole basket of them. And that single difference leads us directly to the most critical thing for any new investor to understand, the trade-off between risk and stability. This is where the two paths really separate. And you can see that difference pretty clearly here. Investing in just one stock is a really concentrated bet. All your eggs are in one basket, right? If that company has a bad quarter, your portfolio feels it big time. With an ETF, though, your risk is spread thin. If a few companies in the fund have a bad year, who cares? Their poor performance is cushioned by all the other successful ones. And that gets us to the core trade-off. A stock offers you that chance for huge, fast gains, that lottery ticket potential. But it comes with high volatility. You know, those wild, stomach-churning swings up and down. ETFs, on the other hand, they are built for a much smoother ride. The goal is stable, steady growth because your success is spread out across the entire market. In the real world, this feels like the difference between a roller coaster and a calm train ride. A single stock's price can shoot up or crash down in a single day. An ETF, because it's an average of so many companies, tends to move much more smoothly and predictably over the long haul. So, we've gone over the mechanics, we've looked at the risk. Now it's time to finally answer that big question we started with. For someone who's just getting started, which one of these is the clear winner? Okay, let's put it all on the table. You've got the high-risk, high-reward shot of a single stock versus the built-in safety and stability of a diversified ETF. Where should a beginner put their focus? And the verdict is ETFs, hands down. For the vast majority of people starting out, ETFs are the recommended choice. Why? It's simple. They take away the enormous pressure of trying to pick winning stocks. You don't have to be a Wall Street genius overnight. You just invest in the market as a whole and let that diversification do all the hard work for you. But, and this is important, don't for a second think that ETFs are just investing with training wheels. In fact, they are a fundamental, absolutely crucial tool used by the most sophisticated and successful investors on the planet. You see, the pros use ETFs to build the rock-solid foundation of their portfolios. It's the core. They rely on them for safety, for instant automatic diversification, and for tapping into that incredible power of slow and steady compounding that truly builds wealth over time. It's the set-it-and-forget-it engine of a smart strategy. All right, let's lock all this in. If you're standing at that fork in the road, trying to decide, here's the final, simple, side-by-side comparison you need to remember. Here it is, all laid out. A stock is one company, higher risk, higher volatility, all in the hopes of one massive reward. An ETF holds many companies, which means lower risk, smoother growth, and a goal of building wealth steadily over the long term. It's the difference between swinging for a home run every time or just getting on base consistently year after year. And if you remember just one single thing from our chat today, let it be this. For most of us, the goal isn't to play the stressful, high-stakes game of trying to find that one winning needle. The real winning move is to just buy the whole haystack.